Ladies and gentlemen, welcome to our weekly investor update. My name is Rachel Curlew, AVP of Investment Banking, and I'll be your host today. On today's agenda, we'll be discussing Main Event Entertainment Group and Scotia Group Jamaica Limited. I'm joined by Justin Scott, investment analyst and co-host on the channel. Welcome, Justin.
Thanks, Rachel.
Don't forget to subscribe if you like the content. Also, hit the bell to stay up to date with the channel. We upload content like this once a week. Also, if you want to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media and get started today. Now, let's get into Scotia Group Jamaica Limited. Okay, so before I get into the analysis, Scotia is definitely a household name in Jamaica. Scotia Bank was actually named Jamaica's best bank in July of this year. So 134 years later, and they're still providing great financial solutions in Jamaica, which is also evident in their 9-month result. So let's take a look here. Starting with net interest income. This line item grew by 33% to 28 billion relative to 21 billion last year. This is underpinned by growth in their lending portfolio. Here, their loans grew by 20% to 259 billion relative to 219 billion last year. So quite impressive that they have grown their loan book by so much in this high interest rate environment. Growth in their loan book comes from a 20% growth in commercial loans, a 10% growth in retail loans, and a 29% growth in their mortgage loans. Despite the significant growth in their loan book, their expected credit losses actually dipped 24% to 1.6 billion. This is really impressive as this only represents 1% of Scotia's loan book. Moving on to their insurance revenue, their net insurance revenues increased 194% to 1.5 billion due to growth seen in their creditor life portfolio. The Scotia Insurance Division celebrated 25 years in June of this year, and they're still committed to innovations, bringing new products to the market, and enhancing on existing products. I believe their last enhancement was done on their Scotia Critical Care Illness Plan, so well done to Scotia there. Moving on to the net fee and commission income, this line item saw a 25% increase to 5.8 billion due to increased customer transactions and business activities. Their operating expenses increased 11% due to higher transactions and related tech support fees. The group, however, continues to be anchored by their prudent expense management initiatives. Pulling all this together, Scotia reported a 9-month pre-tax profit figure of 19 billion and a net profit figure of 12 billion. Again, this is driven mainly from the growth in their loan portfolio across the various divisions, which accounts for most of the group's revenue. Looking on the balance sheet, their total asset base still remains robust. It now stands at 646 billion, 55 billion higher than the prior year. Again, due to the significant growth in their loan portfolio, which grew by 40 billion alone to 259 billion. Their liabilities showed an increase of 10% to 532 billion, mainly driven by increased customer deposits. Deposits now stand at 445 billion, which just demonstrates Jamaica's confidence in the group. Finally, shareholders' equity stands at 113 billion relative to 104 billion for the prior period. Looking at the market stats table, the stock is trading at a price of 33.31 relative to a PE of 6 times. This is lower than the main market PE of 10 times, even lower than NCB's PE of 8 times, so significantly undervalued. It's a strong company with a market cap of 103 billion, the second largest bank in Jamaica by balance sheet, and I have a lot of confidence in this company. Looking on the second slide, the company's quarterly profits are clearly on an upward trajectory as they continue to increase their loan book, their insurance revenues, along with their fees and commission. As rates come back down, the margins will be squeezed, but the growth that we're expecting in the loan book should offset that, which will result in further profits for the group. The company is now actively focused on growing their off-balance sheet business, namely their mutual funds and unit trusts. Again, they've been at this for 134 years, so there's lots of confidence here in the Scotia Group. Looking at the next slide, the stock is currently trading at $33.31. It has gone as high as $36 within the last 52 weeks, but on average, been trading within the 34 space for the last 9 months. The stock is undervalued relative to its trailing earnings and the main market PE. Scotia is a solid company, again, second largest bank by balance sheet, but actually named Jamaica's best bank in July of this year. Scotia has been around for 134 years and they have been providing great financial solutions in Jamaica. I have no doubt the company will continue to deliver strong performance across all business lines. They are committed to delivering shareholder value by ensuring the company remains a dividend-paying stock. So it's easily a $60 stock, all things considered, and thus definitely a buy for me. What are your thoughts, Justin?
All right, thanks, Rachel. Yeah, so I definitely do share your sentiment in regards to Scotia's growth right now. It's a very strong company. It's been around for forever, as I said earlier, right? So they've grown 33% in terms of their interest income due to the current interest rate regime that we're under right now. Definitely benefiting in that regard. Their growth in their insurance revenues, commission incomes, growth in their loan portfolio is definitely reminiscent of the current economic activity we're having right now. Even though rates are high, businesses do still need to operate. The growth in insurance revenue right now is indicative of a lot of the people taking out insurance, whether it be, corporate or so on. And their operating income has only grown in that regard. So Scotia is definitely, continuing to push on as it is as a market giant that they are. And they're just a little bit undervalued in terms of their book value, as I always bring up on the show. But their PE ratio at 6 times as a result of the current market pressure on financial institutions that we're seeing right now is definitely reminiscent of that. We're a little bit of a bear market in that regards. But I imagine that when rates do come down, even though it's going to squeeze their loan portfolio a bit more, it's going to provide a lot more liquidity towards the market. And that's going to reflect a bit more in the capital markets as things shift a bit more from the debt side of things towards putting further investments and putting a lot more money towards equity. So I definitely think Scotia can grow maybe in the next 12 months thereabouts in terms of the stock price. But they're going to continue pushing on as the market giant they are right now. So I agree with the sentiment there, Rachel.
Great, thanks for that. So we are aligned. Guys, get some Scotia while you can. Now let's move on to main events. Justin, over to you.
So, Main Event Entertainment Group. It's definitely a favorite of the show. If you guys, for the regulars there, you guys will know, we're always discussing Main Event. But for the ones who don't know, Main Event is a market leader providing diverse range of marketing, events, and entertainment-related services, equipment rentals, audio, film, online marketing, project marketing, and sound production. It is one of the market leaders in that regard, if not the market leader in that regard. Right, so they are the ones who put on some of the largest events in Jamaica. Any national event you can close your eyes and think of right now, we're talking about Jamaica Sumfest, talking about Rum Festival, we're talking about Issa Boys Champs, and some of the more recent or high marketed ones, like the Chris Brown concert, they would have definitely played a hand in that right there. The Burna Boy concert from December, so you get a rough idea of just how integrated Main Event is to the event space in Jamaica. And we're only going to be getting more. A recent tweet by Mayor Delroy Williams from about August 2023 says more big concerts are coming to Jamaica. And who's going to be right there to receive them? That's Main Event, right? So we're going to be experiencing a lot more high volume, high production results. And Main Event can only further benefit. Jamaica is becoming one of the hottest tourist destinations in the Caribbean region, with a lot of people flying in. We got over $1.5 billion in terms of tourist revenue over the course of the summer. And I think we're going to be on the verge of maybe about 5 million stopover tourists for the course of this year. And so things like that are going to be continually developing. People coming here to do their weddings, more events that are brought in, that are bringing a whole heap of revenue, are going to need expert organization and execution. And in that regard, so let's take a look at their financial statements. 45% increase in top line over the course of the 9 months, I should say. 45% increase from 1 billion to 1.5 billion. And this naturally caused an increase in direct expenses, moving up 28% from 582 million to 747 million. However, I should point out for the third quarter itself, they are a bit down in terms of top line and bottom line. As a result of shifting event timelines. So it's a contract-based business, and it's all dependent on when the more impactful events are kept. So if, for example, a event is put off or the date is rescheduled, so if it's an annual event and it kind of moved away from when its usual event timeline would be, that's definitely going to impact how it responds to, main events revenues. So for the third quarter in the July 2022, they did about 600 million revenues and 428 million this quarter, July into 2023. So let's get to the financial statements. So main event did about $1 billion for the 9 months in the July 2022 and $1.5 billion for 2023. 45% increase, and naturally that brings on a greater increase in direct expenses, moving from 582 million to 747 million. That's up 28%. And then when you get all right down to it into the net profits, they are up over 100%, moving from 103 million to $215 million. So now this is representative of their 9 months. However, if you were to take a further look into the most recent financial statements that dropped, their quarter itself is a bit down in relative to the same period last year due to, as they stated in their MD&A, a shift in event timelines in when they would have kept. I don't know if there's a result of timelines where annual events would have shifted or simply things have been put off. So maybe it's going to be put into the fourth quarter, and we're going to be seeing that represented in the annual report. But we'll definitely can see a bit more from that. When I get to the balance sheet, you'll be seeing an increase in assets on the same page right here, increasing 26% from 987 million to 1.2 billion. Equity increased 31% from 653 to 856 million, in line with the growth in net profits. And liabilities are only up about 17% from 333 million. 391 million. They have about $48 million left in bank loans to Sagicor right now. That should be paid off within the next 2 quarters. So we can expect that to add about another $3 million per quarter towards their profit before taxes. They're currently trading at about $14.46, PE of 16 times, just around where the junior market PE is at 16, just the same, and a book value per share of $2.86. I definitely think the current price, with a PE of 16 times, even in a market we're in right now where things are a bit pushed down by a bit of a sell-off relative to the start of this year, caused by increasing interest rates and just general shifts in some of the bigger markets, the bigger market cap companies like NCB, for example, or even some of the other bigger ones in the junior market have been pushing down the market prices, and as a result, main event is still trading just about on par with the junior market PE, demonstrating just how much confidence investors have right now. It's just on par, but I think as we get further along the financial year and things are pushed a bit further, we should be seeing great results from them, even greater than this. Right? Next slide. We see the quarterly profit movements, and you see what I was talking about earlier, where the profit for this quarter is only 23 million relative to the period last year, where it's down about $100 million in relative, right? Well, let's see if those events have shifted into the fourth quarter. The third quarter for them is typically one of their better ones, but I think going forward right now, so for example, in the fourth quarter, we'll be seeing results from Grand Gala, the Chris Brown concert, Streets, and a lot of the other events that they would have taken a part in. Wedding season is summing up further on through the year, so we're going to be seeing a lot more from them. But trailing earnings for this year is doing absolutely spectacular. And if we can expect this to be their status quo going forward, then we can only expect great things from main event. Next slide speaks towards the stock price movement, moving from around starting the year at about $4 up to $14. The market's expecting great things from main event. They're really pressing it on right now. And it goes to show, because in 2021, they sold about 10% of their stake to Supreme Ventures and began a partnership through their Cayman Spark initiative, where they're the ones doing a lot of the event organization for the Caymanas races, and we're going to be expecting a lot more from them as they continue to further develop the Cayman Spark. So that partnership that they have with Supreme Ventures is definitely going to continue pushing main event pipelines and prospects, because Supreme Ventures is branching out into Guyana, Ghana, and a lot of these other places. And they may even have a role for main event to set up a lot of the events and while they continue to branch out into the region. So I think they're doing great. Rachel, do you have any thoughts about main events right now?
Yes, so main event continues to deliver strong results. I do agree with you. Their quarterly profits have dipped relative to the prior period, but I think it's important for viewers to appreciate that these events were probably abnormally higher than usual last year as we came out of the intense lockdown restrictions. Events have pretty much tapered off now and growing in what I would say a normalized way. Overall, I believe the company is well positioned for growth. The event space definitely has a room to grow, and Solar has a strong brand name out there, as they really know how to execute great events. At $14.46, the stock is fairly valued now, I agree, but that position can change as we move towards the Christmas season. I'm sure at a minimum, the team will secure their existing partnerships for recurring Christmas events while focusing on winning new bids. So I'm expecting that their trailing earnings in 6 months' time should be better than the trailing earnings of $262 million we're seeing now. So let's sit tight and see how that plays out. And that's it for today's discussion. Special thanks to our viewers for tuning in. We couldn't do this without your support. Justin, thanks as always for sharing your insights on the panel. If you're curious about our updates on our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. Give us a follow and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, and remember, slow and steady, win the race. Thank you.